In my AT&T video a couple weeks ago, I identified 11 stocks that I might buy to replace AT&T. This video focuses on one of those stocks. After I tell you about it, I will also present quality snapshots of all of the 11 stocks. Hi, I'm Dave Van Knapp with the Dividends and Income channel. Before I get started, please let me ask that if you appreciate this content, please give the video a thumb up, subscribe to the channel, and click the bell to get notifications when we post new videos. Thank you. The stock I'm covering today is Gilead Sciences Incorporated, which is a pharmaceutical company. Let's go right to Gilead's Quality Snapshot. I'm going to walk straight across this Quality Snapshot to remind you of the elements of it and how I arrive at a final grade for Gilead. The first column is the value line safety grade. Value line grades the safety, which means generally means the stability of the company and the stock, and even of its stock's price to some extent. Value line gives Gilead a grade of 2 on a scale of 1 to 5. 2 is the second highest grade that they give in this category, and so I rate it above average. I rate each of these elements we're going to talk about, I give from 0 to 5 points. Which you can always tell by the color that I use. This light green color indicates the second highest ranking on Value Line's scale for its safety grade, which indicates 4 points. I won't keep repeating that as we go across. The yellow color indicates 3 points. There is one dark green color that gets 5 points. Moving across one column, the Value Line financial strength grade, which is the second quality indicator that I pull from Value Line, gets an A. On this indicator, Value Line scale starts at A++, then goes to A+, and then goes to A. So A is the third highest rating that Value Line gives for financial strength, and therefore it gets 3 points. Moving across, the Standard & Poor's credit rating, that's a very complex set of grades. I won't go into them all here. Suffice it to say for our purposes in this video that the grade of BBB plus is an investment grade rating from Standard & Poor's for Gilead. Moving over one more, the Morningstar Moat rating. Moat indicates how strong, how wide, and how long lasting a company's competitive advantages are likely to be. Morningstar's highest rating is a wide moat, indicating the most protection, and that is the rating that it gives to Gilead. So that color is a dark green, and Gilead gets 5 points on this factor. The final factor comes from Simply Safe Dividends. It is their dividend safety grade, which indicates the likelihood that a dividend will get cut, or the lack of likelihood that it will get cut. 70 grade is in the middle of their second highest tier of grades. They score on a 0 to 100 scale, and every 20 points is a tier. So 81 to 100 is the highest tier, 61 to 80 is the second highest tier, and at 70, that's where Gilead falls. If you add up the points across, we see that the total quality points that Gilead gets on its quality snapshot is 19, which is above average, and I give it a B. Let's talk a minute or two about Gilead's business. It's a pharmaceutical company. It was founded in 1987 in California. It went public in 1992. Gilead focuses on life-threatening diseases: HIV, hepatitis B and C, pulmonary and cardiovascular diseases, and cancer. Like all brand name drug companies, Gilead is subject to patent expirations. And the following graph of revenues shows how expirations in the past decade on its hepatitis drugs and its HIV treatment, Keytruda, have caused its revenue to actually go down after peaking in 2015. On this revenue slide, we can see that Gilead sales revenues went back up in 2020. That rise came mostly from the drug remdesivir, which, as you all probably know, turned out to be a treatment for COVID. And it's been administered to about half of the patients, COVID patients in hospitals in the United States. While we don't know the exact future of COVID and the need for a drug like remdesivir, Gilead does consider the need for remdesivir to have some constancy to it, but there's no way to predict future remdesivir revenues. This display shows Gilead's dividend record. I'm going to walk quickly down each of the elements so you can get an idea of how I look at a dividend record and interpret it. The first metric is yield. Gilead is what I would call a high yield company. It yields 4.2%. I consider anything above 4 to be high yield. Its consecutive increase streak is short. It's only 6 years, and the reason it's short is that Gilead has only been paying dividends for 6 years. So we said before that the company went public in 1992. Approximately 20 years later, it paid its first dividend. Those first dividends have gone up quite quickly from having not had a dividend for its first 20-some years of life. Gilead, like many companies that start paying dividends 20, 25, or 30 years into their lifetime, often, once they get used to the idea of paying a dividend at all, raise it quickly from year to year. And we can see that over the last 5 years, Gilead's 5-year dividend growth rate has been 16% per year. That is an excellent speed of growth, but it may not be sustainable. It often is not. Companies will go quickly up with their early dividends, having never had a dividend. Then they start paying one, get used to that, raise it quickly, but at some point it needs to level off and start to match their cash flow or their earnings from year to year. That seems to be happening with Gilead. Its most recent raise, which was paid in January of this year, was just 4.4%, which is okay, in my opinion, given the overall story. I expect there will be a few more years that Gilead plays a little with the size of its annual increase as it finds the right amount for itself as a company. The last item repeats something we already saw. Gilead dividend is safe, gets a safety score of 70 of 100 from Simply Safe Dividends. The overall dividend grade, adding up all these factors, I give Gilead as an above average B. Gilead gets the money for its dividend from its cash flow, which is very strong. On these two graphs, we can see how that comes about. The graph on the left, called operating margin, shows that Gilead is an extremely profitable company. The benchmark line in this graph is 25%. Gilead's operating margins have been running in the 40s and 50% for years. On the right, the free cash flow margin tells a similar story. The benchmark line is 20%. Gilead has been in the 30s and 40s for most of the years over the last decade. I have described my valuation methods in earlier videos, so I won't repeat all of that detail here. This table shows my valuation summary for Gilead with the 4 methods that I use. The valuation ratio, if it's below 1, means the stock is undervalued. If it's 1, means the stock is fairly valued. If it's above 1, means the stock is overvalued. 3 of the 4 valuation methods that I use come in under 1, and the average of all 4 models shown near the bottom is 0.89, which in plain English means that I think at this time Gilead is about 11% undervalued. Translating that to dollars gives us this. I think that Gilead's fair price is $75 per share. It's currently selling at around $67 per share, so it is available at a significant discount, which is what we saw in the previous discussion. The maximum buy price, I always put a 10% cushion either side of what I consider to be the fair price of a stock, because pricing a stock is part art as well as part math. But we don't have to worry about the maximum buy price currently, because Gilead is selling so far below its fair price. With the current discount available on Gilead, a good time to buy it if you like the company and its dividend record and other elements about it is right now at an 11% discount. I consider Gilead to be one of 11 potential stocks that I might buy when I replace AT&T in my dividend growth portfolio later this year. There may be other contenders, but right now these are the 11 leading candidates as I ponder what I will do. When I did my video on AT&T, which you can find on this channel, dated June 2nd, I presented these 11 stocks. In the comments, one of you asked me to go into more detail on them. Well, we just covered Gilead in detail, and what I'm going to do for the other 10 now is display the quality snapshots for all of them. These snapshots will be shown in alphabetical order. While we move through these quality snapshots of the 11 candidates for replacing AT&T, please remember to click the buttons, and I will say goodbye, everybody. I'll be back in about a week with my dividend reinvestment for June. Bye, everybody.